it's opened up the opportunity for me because so many people are now scared to invest in real estate. This is what I like. The sophisticated investors are there now. Everybody that thought real estate investing was easy have now gone back to their cubicles. People think that they can predict the future by looking at the past, but that's not always a good indicator. It rhymes, but it doesn't always repeat. And then the other reason why is this market conditions change, mortgage rules change, population changes, more people getting into real estate investing changes. So there's always changes in every market, every condition. And so you always just got to be able to try to stay ahead of the curve.
How do you structure all of this to ensure that you have the capacity to be able to take those mini retirements? How are you intentionally trying to structure this? Are you setting yourself up to have that time freedom to do this?
The very first thing you have to do, the very first thing that we did was, because if I'm going to be taking that much time off, I also need active income to be coming in as well too. So we built a business based on, that was it. Just as simple as that. Just understand that when you do move, you got to make sure because you'll find yourself in a lot of trouble really quick.
Welcome to the Wealth Through Real Estate Show. Today we're joined by Gary Hibbert, full-time investor, private lender, and brokerage owner who started investing in 2008 and built his portfolio around freedom, not just doors. He's scaled rent-to-own deals, mastered single-family conversions, and built a lifestyle that includes mini retirements. Mini retirements every year, if I'm not mistaken, hey Gary? And in this episode, we'll get into how he's built it, where he's investing now, and what you can learn from the moves that he's made. Gary, I want to welcome you to the show.
Oh, listen, man, thank you very much. Thanks for that very kind introduction as well, too. I appreciate it. Yeah, listen, man, I'm excited to do this with you, and maybe there may be some new people in your audience that don't know me and my story, and so I want to share it. And this is kind of part of when I started my journey down the path of real estate investing was I had to learn from other people that were where I wanted to be, and this is a great avenue, and especially now in today's day and age. So thanks for having me.
100%. That's the best way. You could go out and try and just forge it on your own, but it's a whole lot easier if you can learn from people who've been there before. And that's what I try and do. Ask the right questions so that we could pull as much knowledge from you as possible to help pave the way for others who are trying to, forge their own path and get to the point where they can feel comfortable about retirement and happy about the future that they're building. Now, Gary, as you mentioned, there might be listeners out there that don't know who you are, don't know what you've done. Can you sort of walk us through how you got started in real estate and what made 2008 feel like the right time to jump in?
Yeah, it's a good question. It wasn't so much that I thought that it was the right time to jump in because I didn't know anything about timing the market, there's a saying, right? It's not timing the market, it's time in the market. But the reason why I got into real estate investing was very simply I'll try to make a long story short, but I'd gone to the bank a few times to take all my debt and bury it into my mortgage. And so the one thing I realized was that, man, my house is saving me. It's saved me so many times now. And I'm like, I don't understand why. Like I started working at TD Bank and I was making $24,000 a year and close to the end, I was, six figures almost. And this doesn't make any sense. I'm making more money, but I'm like behind the eight ball. And when I went in there for the third time, my financial advisor said, look, I'm going to take your credit cards away from you and your HELOCs, your lines of credit. I'm like, yeah, come on. Everything I buy now from now on is cash. And so when she left the office, I looked up at the wall and I saw the index chart. And the index chart now really shows you what the stock market has done over the last 50 years, what interest rates have done, who was the prime minister. There's this huge chart. It gives you a nice snapshot of the past. And I looked at inflation and I realized that for the last 50 years, inflation was anywhere from 2%, 1% to as high as maybe 14, 15%. But if you average it out, anywhere maybe say between 4 to 5%, okay, over a long period of time. And so when I did the math on the raise that I got at work the previous year, so the previous year I got like $1,000 raise. And I did the math. And what you do is I'm trying to remember the formula. The formula is you take what you previously made, divide it by that $1,000 or whatever the raise was, um, by your new income. And it worked up to like 1.4%. And I was like, I get it. I like that was like my light bulb moment. Like I can't
Yeah.
outpace inflation. My raise is not keeping up with inflation. So what if I bought one more home? What if I had one more investment property? How would that change my life? And that really started me down the path of real estate investing, of understanding how that works.
I love the fact that you just opened up that avenue of conversation to have, because I know a lot of people just focus on the very micro of it, but that is one of the biggest reasons why, because and people don't know this, most people don't understand the flow of money and the fact that we have inflation that we need to outpace, the fact that we have the debasement of currency that we need to outpace. So we really need to be making substantial increases just to keep up with this, the cost of living. And that's one of the key things that real estate really helps with. Because no matter how much more dollars they continue to print, no matter how much inflation increases, real estate is always going to be a hedge against that. So the fact that you really figured that out like early on, like before even getting started, is pretty cool. A lot of people just know, hey, real estate is a good place to park my money, real estate is a good place to build my wealth, but most people don't understand fundamentally why. I mean, yes, we understand appreciation, we understand cash flow, mortgage pay down, and the tax benefits of it all. We know that, but to really understand why, that's pretty cool. Now, given you have the financial background, so it makes a lot more sense.
You know
But
what? I didn't. I didn't have the financial background because I worked in IT. I didn't work at the
ah,
branch. I didn't work, in finances. I didn't. I wasn't financially, or I didn't have financial literacy. It was
yeah,
IT, and I was tired of actually working too with mainframes and servers and Ethernet cable, and But it was a very cool job though at the time, because one of the things that I learned at TD, and I'm very thankful for what I learned there, was I did incident management. I climbed the scales and I got into incident management, which is essentially dealing with big, massive problems that the bank would have right across Ontario, across Canada, and even the world, because it was the operations center. And that really helped me build the skill sets that I have today to be able to take a look at big problems and
hmm,
realize that as long as you break them down into little small steps, and then take action, like you got to just do something. Uh,
yes.
that was an important skill set.
Yeah, I think a lot of people getting started want to be able to see the end and know plan each step out, but you don't need to. You need to know the direction you need to head in and see those first few steps, and as you go, the next step will reveal itself to you, and you just sort of take it from there. I like that. Now, from starting there, how did things play out? How did things progress? So you sort of had this epiphany moment where you're like, okay, real estate
Yep.
seems to be something that I need to pursue, and this is going to help me better my financial future. How did things progress after that?
Yeah. So then from there, I just started telling people that I need to buy investment property. I need to buy an investment property.
Yeah.
And I just started telling people. And one of my friends came back and he said, "Hey, were you serious about buying an investment property?" I'm like, "Yeah." He goes, "Well, look, my dad's he's going through a divorce and he really wants to stay in the property. Would you buy it?" And I'm like, "Yeah." Now, I didn't even know what the property was. I didn't know anything about the property. I just like, yeah, no problem. Like, what is it? And so that home, it was 200,000. It was in Oshawa, and it was an illegal 2 unit. So it was 2 units in there already.
Yeah.
And so when I took a look at it, I realized I didn't have the down payment. I did a whole refinance. I had some money, but I didn't have enough. And so then I went back to my friend and I go, "Listen, man, I don't have a whole lot of money." And he goes, "Well, I don't have a whole lot of money either." And I said, "Okay, well, here's what the down payment is. What if we split it?"
Yeah.
And he took a look and he hummed and hawed and he goes, "I'm like, look, man, it's your dad. Like, I'm trying to help you out here." And so we did a joint venture. Funny enough, all I did was, I swear it was like a piece of paper. That was it. It was a piece of paper. And I wrote down a few words on there saying that we are a partnership, If we make money off it, we will share it. If we lose money, we will share the risks. And then we both sign it. That was my joint venture agreement. At that point in time, I realized that cash flow was important
Yeah.
because I'd rather put money into my pocket on a monthly basis as opposed to having to put money out. And that I didn't have to do it on my own, that I could partner with somebody. That really, and again, I didn't go to any events. I'd done nothing on real estate. I wasn't really getting plugged into all that stuff, but I knew enough at that time that those are two very important things,
Yeah.
cash flow and partnering with other people, because even no matter how big you get, you look at people like Robert Kiyosaki or, Grant Cardone, like they do partnerships as well too. Eventually you will run out of money,
100%.
or you have no money like
Yeah.
me, and that's how I got started.
Question for you on the cash flow side. What was your, what were you telling yourself mentally about this cash flow and what it is? Because I find sometimes, and okay, at this point you weren't going to like real estate events and seminars, but sometimes people see it as, I'm going to get cash flow and I'm going to quit my job so that I can live off the cash flow. Other people see it as this cash flow is a hedge against any unforeseen expenses that pop up. It's sort of a safety net to ensure that I can hold the property and get all the benefits that come with holding the property. At this point in time, what was it? Because I speak to a lot of new investors and like, yeah, I want to get a few properties so I can just quit my job and live off of the cash flow, which in my opinion at least isn't necessarily the most stable, predictable way to live, if you know what I mean, because it's
Yeah,
not
no.
always
So from
guaranteed.
there, it was more of I wanted the cash flow so that it was twofold. One for maintenance, if
Yes,
anything happened, the roof or
exactly.
the furnace or the windows or whatever. So I really wanted the money for that. And then number two, as long as I knew what I bought and where the issues were, if something needed to be done at the end of the year, if I felt like there was enough money in there, I could take a little bit out for
Yes.
Christmas or
Got it.
whatever, or a little
Got it.
vacation. But I
Yes.
wouldn't go crazy on it because I always wanted to keep at least a minimum 3 months of rent in there minimum.
Yeah. Yeah.
Right. That was my big thing. Um, and I never looked at it as saying, well, I'm going to have enough money from cash flow to retire. I was more looking at it in the beginning, enough cash flow, or sorry, enough homes to be able to have a good retirement. That's the way I was kind of looking at
Makes
it.
sense. Yes.
Um, and then I bought another property the year after. And then the second one, I'd made a huge mistake. Wasn't a huge mistake, but it wasn't the right property. I didn't know what I was doing. And that
Yeah.
was when I realized I needed to get educated because I didn't
Hmm.
know. I really didn't know how to screen tenants. I put a tenant in there without doing any kind of background check. He just gave me cash in my hand. I'm like, man, this is easy. This is a
Yeah.
real easy game, you know? And then
Yeah.
I realized that no, you got to screen tenants and you got to do it properly. And so that was when I realized I lacked the education of real estate investing.
Got it. Got it. Well, that's the thing, the tenant makes or breaks your experience as a landlord, right? You could have great tenants and you're like, man, real estate investing, I love it. You could have a bad tenant and you could be like, oh my gosh, I don't want to be a real estate investor. I don't want to be a landlord. I don't want to deal with all of that. And, it can be, that risk can be highly mitigated by knowing how to screen tenants
Yeah.
and put good tenants in there. It can't be completely reduced, but like you can reduce it drastically. Now, I love the fact that you took action. You had the right mindset as well, because real estate, as much as we'd like to hope it's a get rich quick, it's a get rich slow kind of thing. You know what I mean? So having a long-term outlook that like, hey, I'm building for my future, and building for my retirement, helps set expectations, right? So that you in this for the long haul, because that's what you need to be. And you took the action and then you went and you got education. So what did that look like from there? After the second property, you started getting a little bit more education. How did things progress going forward?
Yeah. So then I started doing a search on a better way to invest in real estate. And then I
Hmm.
came across rent to own. Didn't
Yeah.
know anything about the concept. Um, I found a company that was put on a seminar. I went out, listened to it. I'm like, this makes sense.
Yes.
Because now I was putting families into homes that were putting down a portion of a down payment. They had a vested interest in the home. The
Hmm.
rents were higher. And it felt good because I was helping a family that was going to own this home in 3 years. And so in 2010, Sorry, 2009, I bought a rent to own, went well. And I'm like, this is what I'm going to do. 2010, my wife and I started a company called Smart Home Choice, which was a real estate education company. And so now we're going to educate people how to invest in real estate. And we don't have a whole ton of real estate knowledge yet, but we're getting there. And so what I did was I said, okay, here's what I'll do. Instead of me educating, I'll do a little bit. But why don't I bring in some experts and people that are really good? And that's what I started doing. I was like, hey, look, I'll rent the room. You come, you do your presentation. It could be on an accountant, a lawyer, an investor that's doing really good in that space. And then people just started coming out because I would advertise it on Facebook. I would put it in the newspaper. I would put it on, we're talking back when, you'd open up and you'd see something in the paper there, right in the ad space. And that's what I did. And then also too, in the beginning, I also did events in my home. I did it right in my living room. I invited all my friends. And for the first 7 months, 8 months, that's all I did every single month. I just kept inviting my friends and family out to listen to what we had to say. And that is what helped me grow the business. And that also helped me build the joint ventures. And from 2010 to 2014, I think my wife and I think we purchased like 19 properties. We just expanded and we just believed in ourselves. And I remember, and people forget this, is that from 2008 to 2014, everybody was saying, do not buy real estate. People forget that because it was very fearful at the time because the US market had crashed and everybody thought the same thing was happening here in Canada. And we just kept doubling down. And you look back at it now and you're like, well, of course you should have bought in 2008. Why wouldn't you? And that's the same thing today. I can see the same thing. Is it different? Of course it's different. But we already had the crash in residential. I'm not big on condos because I can't do anything with a condo. But when I'm taking a look at the properties out there right now, and if you buy smart, Durham region, there's some great places. Peterborough, you want to go on the outskirts and you want to focus on cash flow. There's some great opportunities out there. And so that's what we did.
I think most people have heard this, but Warren Buffett's got that quote when everyone's being greedy, be fearful, and when everyone's being fearful, be greedy, kind of thing. And that's really where the opportunity lies, is when most people are saying, don't buy. But here's the thing: is really educating yourself on coming to your own conclusions of where the market's at, and understanding the economics behind it, and then diving down more into the micro of where you invest in, where you're located, and understanding that geographic location and what that market's like will help give you confidence to know if it's a good time or not to be buying. I mean, it's the same here in, Edmonton, Alberta, and it's the same thing. You might see something else happening in the States, but you look, we in the beginning of of a boom here in Alberta, you know what I mean? And prices are steadily going up. And so it's really dependent on where you invest in. But I have a question for you. Speaking about market cycles, how do you approach that differently now that you've sort of lived through a few? You've got the experience under your belt now. You probably have a better idea on what to look for, what indicators to pay attention to, how to cut through the noise of what you should be listening to and what you shouldn't be. How do you approach that now?
Good question. So the news, limit the news. It's just there to create fear. Number two, fundamentals. So I'll go through some of the fundamentals that I look for. So number one, we talked about already, cash flow. Cash flow is incredibly important. Number two, if you're looking, when you're talking about the micro, is a population going up or going down? You can go to Stats Canada to get that information for any city that you're thinking about investing in. Number two is jobs going up or down. So is it increasing? Is it, and what type of jobs are they bringing in? Infrastructure is huge. And so when I purchased out in the region that I'm in, they were building a new highway that was connecting to another highway. So infrastructure is incredibly huge. I also look at eds and meds. So education and hospitals. And those are huge employers. And so, is there a college there? Is there a university there? What type of hospitals do they have? They employ a lot if there's multiple there and the facilities are good. So those are the things that I really focus on. And once those fundamentals come together, then I know I've got something good. And then, of course, you're going to take a look at your interest rates. And I think this is very important, is that if you're running your numbers, and interest rates are at 1.5%, do not run your numbers at 1.5% interest. Okay. And I think a lot of people made that mistake. And then the
Yeah.
other mistake is don't speculate. You
Mhm.
know, pre-construction is such a dangerous space to be in as a real estate investor. Yes, I get it. I know people
Yeah.
make money in it, but when you don't make money in it, or when the market turns in on you, it'll crush you. The same thing that just recently happened in the condo space here in Toronto and pre-construction. It happened before in the past, like in the late
Yeah.
80s, early 90s, where people went and bought pre-construction and thought it was going to keep going up. So it's a slow, steady game. That's the way that I play. I've always kind of started moving slowly out because I get getting pushed out of the city center. No problem. And people will say, well, who would want to live there? Lots of people. Lots of
Yeah.
people live on the outskirts of the city. Doesn't mean you have to. And I think people get that confused of, well, I don't want to live there. You don't have to. You're not going to rent it. So
Exactly.
those are the things that I pay attention to.
I like that. I like that you mentioned that because it's also the path of progress, right? So if you understanding what's going on where you invest in, and you understanding that the population is growing, that jobs are increasing, then the demand for homes increases, the space needed to accommodate everybody increases, and you end up growing. Now you can grow inwards. I mean, like we're doing this in Edmonton now, where they take in lots that had a home on and building 6, 8 units on that
Yeah.
specific lot,
Yeah.
right? But inevitably you end up needing more space, so you end up expanding outwards, and buying in the path of progress, you could get it for a lot lower than what it will be in the future as we start expanding out. So absolutely. And I love the fact that you highlighted that is you don't necessarily need to be okay living there in order for it to be a good rental. You need to
Right.
understand the fundamentals. You need to understand the tenant demographic, know who you plan on renting to. And that doesn't have to be you or your type of person. So, no, I love the
Yeah.
fact that you highlighted that. So, um, you know, you mentioned the plan being to grow at a slow, steady pace. What's one thing that you've learned not to chase when building this long-term portfolio?
Appreciation.
Hmm.
I think so. When people get caught up in appreciation, forced appreciation is good. This is
Yeah.
where now you're purchasing a home. Maybe it's run down. You to put some elbow grease into it. Forced appreciation is good. What I'm talking about when I say appreciation is trying to time it because when you think appreciation is going to come. Those are just based on what's happening in the market, like I talked about, right? Like job growth, infrastructure, and some of those other things. But I'll take it, but I don't chase it. What I'm chasing is cash flow and mortgage paid up. Those are two guaranteed things. Appreciation, I don't know, might go
Yeah.
sideways for 5 years.
Yeah.
And so what I want to do is I want to enjoy the ride on what I call like the hockey stick, because
Yes.
all of a sudden you never know, and then it just takes off. And so it's not about timing the market, right?
Yeah.
You've got to just be in it because you don't know when it's going to come. And then people think that they can predict the future by looking at the past, but that's not always a good indicator. It
Yeah.
rhymes, but it doesn't always repeat,
Yeah.
right? But it's good to study it. I'm not saying not study it, look at it, pay attention to it, but it doesn't mean that you know when that next crash is going to happen. Because if everybody knew from 2008 to 2017, you missed out on, like, at least here in Ontario, you missed out on almost 10 strong years of appreciation because you thought that you knew that the market was going to crash sometime in that, 9, 10 years. And it took a little
100%.
dip in 2017 for about a year or so, and it shot right back up again. And so people will say, well, interest rates are too high, so I'm not going to buy, or interest rates are too low, so I'm going to wait for, the prices to settle down. And they're always trying to figure these things out. You just got to just get in and take action and, um, you know, just do it. Like Nike says, just do it.
Yeah. Yeah. Oh, 100%. 100%. Question for you. Do you study like the liquidity side, money supply to sort of give you some sort of indication on where the market's at, where it's headed? I know everyone has the crystal ball, and like you say, no one can predict when that crash is coming. But do you study that side of things?
I don't get too heavily into that. I understand it to a point, but what I've studied is the history. So I've gone back to Roman Empire time. I've
Yeah.
gone back to World War I. I've gone back to World War II. I've realized whenever there is sound money, not currency, sound money, that you have little to no inflation. So in Roman Empire times, they had sound money. And as soon as they were attacked and they had to then scale their army, they then started doing clipping of the coins. And so, which was a form of debasement. So I
Debasement, yeah.
understand that. And when you get debasement, you get more inflation. Then there was a time back in the, I think it was 1700 and 1900s, they had little to no inflation. And then soon as World War One happened, they started debasing the currency, and then inflation takes off, right?
Yeah.
And then 1971, which is the most classic, and so sound money came back in Bretton Woods, so 1944, and that was when the U.S. dollar was pegged to gold, and
Yes.
all the other currencies, 44 currencies, were pegged to the U.S. dollar. And in 1971, Richard Nixon took them off the gold standard.
Gold standard,
And
yeah.
so that's when cash became trash. And so once I understood that, I'm like, oh, I can't hold currency, because currency is just a receipt. You want sound money. And if there's no sound money, then where do you put your money? Well, then you got to put it into an asset. And an asset is real estate. To me, that's, I can see it, I can feel it, I can touch it, and it's tangible. So the worst place to keep your money is the bank. And people, unfortunately, aren't educated. I get it. I'm not knocking them. But I was in the same boat as well, too, is that you got to understand money and currency, and where to store your wealth.
I love that. It is so, so true. Um, Very good explanation for people listening out there. Now, question for you is, people understand this. They're like, yeah, Gary, you're absolutely right. I need to take my money and I need to store it in, I need to store it in a good sound asset that's going to help me preserve the value and increase the value of what I have. I get that. I fully believe in that. I get I need to buy cash flow in properties. What are some other boxes that you are checking when you're qualifying if a deal works for you or if it doesn't sit right? Maybe cash flows, that looks good. What are some other things that you're looking at?
Um, Tenant profile, right? I'm looking at tenant profile. And I think as you continue to grow, sometimes the tenant profile may not be the best because maybe you don't have the capital to buy in a better location. And so I'm looking at that. And then I'm also looking at, what else would I be looking at? Higher and best use. I'm always looking at higher and best use. This is why I've stayed away from condos, because a condo is just a box. I can't do anything with it. That's it. It's a concrete box, and whatever the market can bear, the market can bear. But if I buy something that's got land, well, then now if the bylaws change, well, now I can add maybe a third unit. I can add a fourth unit. Maybe I can put a garden suite in the back. Higher and best use is so important. And that's why they call them landlords, right? Because they were lords of the land back in the days.
Yeah.
And so it's the land that you want, because that's the real value. The house, think about it this way: the house is a depreciating asset, because you've got to maintain it. You got to look after it, the windows and the furnace and the roof. And so if you just let it sit there, it'll just keep depreciating. But it's the land, because the population is increasing. And so you want to own more land. And when you own more land and bylaws change, that is incredibly important. That's where you focus on. That's how you build your wealth.
Location, location, location. Hey, it's really it's so true though, and I think that only really comes from understanding the market that you're investing in, so you can
Yeah.
truly understand good location versus a not so good location that cash flows like crazy on paper, but it's not a good spot to be parking your money in. Tenant profile is going to be terrible. Good cash flow on paper, you're going to have high vacancies. You're going to have a lot of property damages, and it's just going to be a nightmare to actually manage. So yeah,
Yeah.
I fully get that. Location is it's a big factor. So
Incredibly
yeah.
important. I remember when I first got into it as well too. When I had to write my ads, I had to really write good ads, because vacancies were higher. So then I would say, hey, here's a beautiful home. It's in a nice neighborhood, child friendly. Look at this incredible, beautiful kitchen. Your families can enjoy, spend. That's how I used to write my ads. Then when the market took off and vacancy went low, home for rent. Because you didn't really have to, and it didn't
Yeah.
matter. But then now, because vacancies are higher again, and I think part of the reason people are asked, like, why is vacancy so high? I think there's a couple different reasons. The big one is there's a lot of accidental landlords out there. So maybe some of them tried to flip, they couldn't. They bought condos, and so now renters now can pick and choose what they want. And so then this is where it's important now to make sure you got a good property in a good location that people want to live in and rent in.
Yeah, that makes all the difference. When they have more choice, they're gonna want to live in better properties. They're gonna live in better locations, and
Yeah.
you drastically reduce your vacancy compared to what the average vacancy is out there.
Yeah, yeah, and so
Yep.
you want to be in that 95%. If vacancy is 5%, you want to make sure you got a good property in that 95% that you can rent, right?
Mm,
So very important. And when rent prices come down as well, because they are coming down, you want to make sure that you run your numbers properly.
I love that. Now, question for you is, what's your take on it when you're trying to just add properties to your portfolio? Are you are you just waiting and looking for a steal of a deal, trying to find something completely under market value, or is it more like, hey, if I'll negotiate, if I have to buy at market value and it's a plain Jane deal, I'll buy that and move on to the next one because my goal is to add more property to my portfolio? Or is it like I'm just hand selecting, just waiting for the right moment, pick one, and maybe I'll get less properties in a year, but I'm trying to find those unicorns and get those. What's your take on that?
Yeah, good question. So the last time I bought a property was 2019. No, 2019 in Ontario. I bought a property down in Mexico in 2022. That's more of like a freedom purchase, right? Where I can
Yeah.
go and enjoy my time in a country that I love. Um, 2019 was the last time I bought a property. And now I'm excited again because I don't like to follow what everybody's doing. I stay away from the herd. When that herd mentality happens, you got to be careful because you got to really now run your numbers. Now that
Mhm.
it's opened up again, I am now looking at Toronto. I've never looked at Toronto in my whole entire investment career. The reason why, because now the numbers make sense. Now
Mhm.
they've changed the bylaws. Now I can build a 5 unit in a semi-detached home, and you run the numbers, the rents are good. That makes sense to me. And so now it's opened up the opportunity for me because so many people are now scared to invest in real estate. This is what I like. The sophisticated investors are there now. Everybody that thought real estate investment was easy have now gone back to their cubicles.
Yeah.
It's unfortunate, but some people just got really bad advice of speculating and hoping that the market will always continue to go up. And this is normal. This will happen again. It's not like it won't. In 10 or 15 years, the same thing will happen. People think real estate investing is easy. They'll jump in and they'll make the same mistakes. And so it's a slow, steady game. And so that's what I'm looking for right now is to help somebody get out of a position that they no longer want to be in. So win-win.
Question for you, for those people listening and they're like, maybe they're thinking, shoot, this was me, or maybe they're thinking, I don't want this to be me. I want to be more of a sophisticated investor. What are some
Mhm.
things that those people could have looked out for to have done things differently?
Very easy. You can listen to a podcast for free. That's one.
Yeah.
Number two, put yourself in rooms. That's all I did for me. I still do it. I still go to investment meetings,
Yeah.
even though I own my own investment club, because I always want to sharpen my skill. I always want to hear what other people are saying and what they're doing. And so put yourself, rub elbows because they can't help but rub off on you. So sit in these rooms, learn from people,
Yeah.
and then the best advice I can tell you is pick a strategy and then master it.
Mhm.
Because you're going to go to these events and you're going to hear rent to own. Oh, I'm going to do rent to own. Then you're going to hear multifamily. Oh, I'm going to do multifamily. And then you're going to hear flipping. Oh, I'm going to listen. 3 to 4 months is more than enough time. Pick a strategy, master it. Don't look at anything else. Just put these blinders on. And then after
Yes.
about 3 or 4 years, this is what I did. And I was able to write a book on rent to own. And then I got into 2 units. Then I got really heavy into that. I tried it in the beginning and I screwed up. But then I was like, okay, I'm done with rent to own. Even though I love the strategy, I now need to hold these properties. And so then I got into converting single family homes into 2 units. And I did that for about 5 years. And then I shifted into private lending. And so now I lend my money out. I do more of that. So, um, you know, saying all that, will I add in my portfolio? Probably. But I really like the private lending space because now I'm also building businesses, right? It's like I've got the
Yeah.
education company. I own a brokerage. I got the private lending company. So instead of working in my business, I'm working on my business and bringing people in. What's that book called? Who, Not How, right?
Yeah,
And so who do I need to bring in to help me continue to grow, right? And
100%.
employ people. I love giving back.
100%. Now, question for you on all of that, because I mean that makes sense. For people out there, trying to pick their strategy, of course, it's geared towards the resources they have, the skills that they have. But was there a component for you when you were transitioning from strategy to strategy that was market related, or was it just purely based on your own personal situation?
It market related, because when I first started, you could buy a single family home and a cash flow.
Yeah.
And so every market you have to pivot and adapt, every single market. And then when the single families won't work anymore, then we had to move into the 2 units. And then when the 2 units weren't working anymore, then we had to move locations,
Hmm.
right? Then when maybe the location starts to slow down a little bit, or it's a little bit more difficult, you talk to the city. Hey, is there bylaw rules changing? And so it's always pivoting and adapting. That never changes. It'll always, you have to embrace change. If you embrace change, it's easy as opposed to complaining about it, right? So always pivot and adapt, always. And every market is different. And rent to own is coming back again. So now I'm pivoting, and I'm going to open that piece up again for investors that are coming in to saying, hey, here's another great strategy. Rent to own will make sense if that's what you like, or if you like multifamily, or if you like larger units. So moving into that space as well too, where not so much will I purchase in the multifamily space? I don't know. But I can help educate people to move into the multifamily space, because I've got a really good, strong, solid team that understand how to run numbers. And so it's always about pivoting and adapting.
Got it. Curious for our listeners out there that are wondering, well, what on the rent to own side stopped working or being as appealing that caused you to switch over? Because of course, rent to own gives you higher money coming in. There's
Yep.
less maintenance once it's set up, because the tenant buyer is handling any maintenance and repairs needed there. Um, what caused you to switch from the rent to own?
One was I was losing my properties
I knew you were gonna
because
say
they were
that.
purchasing it. So as much as I loved
Yeah,
helping the family, like, oh my God, I'm losing all these homes. So
yeah,
that was one. So I needed assets to hold on to and not let go.
yes,
And then the other reason why is this market conditions. Market conditions change. Um, Mortgage rules change, population changes, more people getting into real estate investing changes. So there's always changes in every market, every condition, and so you always just got to be being able to kind of just take a look, see what's happening, and then also too, you got to try to see where does it look like things are moving, to try to stay ahead of the curve and move into that direction. And sometimes it's moving into a space where not everybody is in, but you do your own research. You talk to people that have seen. Like, to me, I think the most important thing that you should always do is talk to somebody who is older and where you want to be.
hundred percent.
That's what I do. I take them out for lunch. I sit down and have a conversation and learn from them, especially if they've been around the block a few times, because they can many times see things that you may not be able to see. So why try to sit there and figure this out on your own?
Oh,
Right?
I love that. That's the quickest way to accelerate what it is that you're doing. I mean, books are fantastic, and those resources they give you sort of virtual mentors. But if you can find people who are in your market, ideally, if you can help it,
Yep.
but who have been there before, they just have a perspective that you don't have. They've been where
Yeah.
you
Right.
are. They can tell you what to focus on, what not to focus on, what to avoid. So if you are fortunate enough that you can cultivate a relationship with someone that's ahead of you, really build that relationship. Um, Curious for you though, how many markets are you in, and how do you dictate when, or how do you decide like, hey, maybe I should explore other potential markets, do some research to see if that's worth pursuing, versus maybe
Yep.
I'll stay in my market but pivot my strategy.
Yep. Um, Part of it was like when I would go to these events and you would see these market updates, and they would do a market update in a different region. And so then I would take a look at it, come home and say, okay, let me see, do I want to invest in Kitchener or Barrie or Peterborough or Durham, whatever it may be, whatever
Yeah.
location. Um, and in the beginning, I tried a bunch of different locations. And then I realized that I didn't need to go far. Now, I'm not against it. You definitely can. But for me, my personal investing strategy and style was there's still lots of gold right here in my backyard. So why do I need to leave? And also, number two, I understood my backyard so much better. So then when I saw a deal, I knew it was a good deal. But if I saw a deal in Barrie or Kitchener, it was a little difficult because now you really got to understand, well, what neighborhood is that? It can make a
Yeah.
huge difference just by a couple blocks. Just a couple
100%.
blocks can make a difference of are you in the right side of the street or the wrong side of the street?
Yes.
And so it was good for me to learn and try different markets. But what I've realized is that I can just figure out my own backyard and understand it well. But then when I had to move to another backyard, then I made sure that I went and I talked to the city, talked to people that were investing in that location, understood the neighborhoods, get a little tour of the neighborhoods, and then say, okay, now I'm going to start investing here. And then just stay there. I don't need to
Yeah.
keep shifting. I'll just stay there. And I know a lot of investors right now are moving into Alberta and Calgary, and some are moving into the US. And there's nothing wrong with it. But, just understand that when you do move, you got to make sure you build a good team in every
Yeah.
location. Don't try to do it on your own because you'll find yourself in a lot of trouble really quick. And so every time I move to a new city, it's a whole setup of
Yeah.
property managers, contractors, plumbers, electricians, stagers, everything. Everything is
Yeah.
all set up there. And I create a whole Rolodex.
That is so true. It really, really, really is true. And I love the fact that you highlighted just by a few blocks because it makes a huge difference. People would really underestimate that alone. Like you have good neighborhoods and you have not so good neighborhoods, but you have like a few streets that it's like, well, you within walking distance of the undesirable foot traffic, and that's going to impact your tenant profile. It's going to impact the value of your property. Being just a little bit outside of that makes the world of a difference. So I like that you
Yep.
highlighted that. And yes, when you move into another market, you have to build that team, and you have to really understand the market before diving in because you can make some terrible mistakes. You find something that cash flows, but it's not a good buy for specific reasons that you won't know unless you really knew the market and boots on the ground visiting, getting a better idea on what that's like. No, I love that response. So I can completely understand why staying in your circle of competence where you've built out your team, you have a very good understanding location
Yep.
wise, and you just pivot your strategy. Now, I have a question for you because this is one thing that I know is like sort of your thesis is like taking those mini retirements. How do you structure all of this to ensure that you have the capacity to be able to take those mini retirements, especially if you spread across a few markets, right? And you have more moving parts, you have more team members, and things to manage. How are you intentionally trying to structure this so you're setting yourself up to have that time freedom to do this?
Well, I think the very first thing that you have to do, the very first thing that we did was so I'll tell you a quick little story is that unfortunately back in our early 30s, both of our moms got diagnosed with cancer. Um, they fought it for 2 strong years, and unfortunately, it took both of them within like a 3 month period. And so imagine playing the game of chess and you lose both the queens. Well, like, the game's over. Like, okay, there's no queens on the table here, right? And
Yeah.
so that taught us a very valuable lesson that this is not a forever ride and you just never know when your last day is. And so we did goal setting. I don't know if you can see on my screen, maybe not, but anyways, we're really big on whiteboarding. And so we wrote down when we worked, we sat. I actually got a Bristol board, and I came home and I sat down with the kids. I said, "We're starting this company called Smart Home Choice, and what do you guys want from it?" And they're like, "We want a mascot." I'm like, "Okay, cool. What else? Win $1 million every single month. Awesome. What else do you guys want? What 2 months vacation every year?" I'm like, "How about 4?" And so we were dreaming big, and we're like, "I wonder if we could do 4 months vacation every single year." And so we're like, you know what? Let's do it. Let's take December and January off, and let's take July and August off. And we just built a business around that. That was it. That was just our goal. And so by doing that, we structured it around those 4 months. And what we did as we continued to grow the business is we just worked as hard as we could in those months that we were on to then be able to supplement the times that we were off. And then I realized that I needed to build a team, because if I'm going to be taking that much time off, I also need active income to be coming in as well too. And so we built a business based on the order we placed in the universe of what we desired in life. And that was it, just as simple as that. And so that really came to me by being a good student of watching The Secret, strong mentors like Jim Rohn, Brian Tracy, Zig Ziglar, Think and Grow Rich, and you read those books, and like, why would you not read a book called Think and Grow Rich? Like, Think and Grow Rich. Of course, you got to pick that book up, and of course, you should read that book.
Yeah.
And so then I realized that it's not just about money, but it was also about, I've talked about this, is like, first you start off with financial freedom. That's what everybody wants. Then you realize that it's not really financial freedom. It's really, you're looking for time freedom. But you got to get the financial freedom first, you get the time freedom. And then when you get the time freedom, you're like, okay, well then I want geographical freedom. I want to be able to go and explore. And so that's really how we kind of put it all together, is building a really good, strong, solid team around us that could build businesses within our business as well too. And so we give them the freedom. Like, there's things that are happening that I don't understand how it works now in my business, because I brought somebody in that does such a better job than I could ever do. And so that I just make people work in their genius.
I love that. And okay, I have a couple of questions for you. So first one being is, you were intentional about planning. I think that's a key step that most people just overlook. They just take action without taking the time to sit, think, and intentionally plan things out. I like that part. Now, you decided, look, if we're going to take 4 months vacation, we need some active income. But I feel like it's an easy thing for people to go into active income where they create another job for themselves, and now they don't have the time freedom. You have to be intentional about getting, like you mentioned, getting people in so that you could work on the business and not be stuck working in the business. How did you go about that? How did that transition look like? Was it a case of, look, we had the finances, so I never ever put myself in that position to be working in the business. I just outsourced people from the get-go to just take control of those roles, and I just kept myself working on the business consistently? Or was it a transition from, I'm going to work in the business temporarily, outsource that, move to the next role, outsource that, and keep growing? What did that whole transition look like? And how long did it take you to get there from, hey, we intentionally sat around the table together, designed this, and yeah, it's come to fruition?
Yeah, well, I had to figure out what I was good at first. So I had to know where my genius lied. And my genius lied, there's a thing that you do as a realtor. A lot of realtors do this, is like a personality test. So DISC,
Yeah.
like the driver, influencer, steady, systems, and cautious, calculated. And I realized that I was an I, so I was more of an influencer. And so when I talked to people, I was able to bring them into my sphere. And when I was able to do that, I then realized that I also needed to bring in some other real estate agents to help me with the flow of people coming in. And so by doing that, I was able to give them the business, but then I would take a piece of that as well too, right? And so that allowed me the freedom to focus on what I was good at, to then every year from doing 40 transactions down to 35 transactions to 20 and so slowly getting down to where I almost do 0 transactions a year, but then bringing in the right people from a real estate real estate transaction standpoint. And while doing that as well too, you've got to then hire an admin to then be able to take over things that are important, like emails coming in and writing the newsletters every single week, because the newsletter and the database is so incredibly important. Then you got to bring in somebody who can do your deals, because you can't continue to keep always writing deals or sending them into the back office, because there's a lot of things that slow you down. And so you got to bring somebody in to do that. So you just got to bring the people in at the right time, because in the beginning, let me back it all out, is that you got to wear all the hats, unfortunately.
Yeah.
And so it is difficult in the beginning. There's definitely no doubt about it, and then as you realize where your strengths are, you outsource the stuff that you're not good at, because then that's what's called leverage. But then you also got to be careful that when you're like, leverage is important. So if I can hire it out for somebody to do it for $40, but I know that I can spend that exact same time to make $100, well, that's leverage. But if I do that and somebody's doing it for $40, but now I'm golfing, well, that's a luxury. So you got to understand the difference as well too. And so luxury is good, but you have to be careful, because some people, that's what ends up happening in a business, that you do too much luxury and all of a sudden now the business collapses. And it doesn't take long for a business to collapse if you're not staying on top of your numbers. Numbers are incredibly important. And so you got to have a strong operations manager as well too. And so you just got to take a look. And then here, and I'll finish up with this by saying that what allowed me to be able to see that and do that properly is working in a larger corporation. And so when I saw TD Bank do it at their scale, I'm like, okay, I got to have regular meetings. Okay, I need reporting. Okay, I need somebody to do this. Okay, I need operation. Okay, we have an issue. That was an incident, and it turns into a problem, and then now we got to document that so that it never happens again. So there's all those things that happen when you're creating these businesses, but you got to be able to see it first to really know how to put it all together. And so it's easy to do it at a small scale when you can see it at a large scale.
Oh yeah, oh yeah. There's a great book that assists with that called, I don't know if you read it, Buy Back Your Time by Dan Martell.
Yeah.
Um, fantastic book. Now, curious for you though, if you are able to just rattle off the the roles as you outsource them, like the order, because the order is also pretty important, right? And it's
Yep.
different for everyone. Like you mentioned, you playing to your strengths, you outsourcing stuff that you're not as good at, stuff that's lower leverage. But what did that look like for you? And I'm just trying to get the idea of how that progressed, and then how long, so that people can have an idea. It will be different for everyone, but how long it sort of took you to get to that point where, because again, like I think Alex Omosi says this, you're wearing all the hats and you're slowly just passing it off, until you sort of, you're running the business on a higher level. You know what I mean? But what
Yep.
did that look like if you're able to just quickly rattle off the positions
Yeah.
you
Real
outsourced?
quickly, first it was bringing in my real estate team. Then when there was a lot of moving pieces happening there, then I had to bring in the admin. And then we brought in our deal secretary. And then my wife changed from a mortgage agent to operations manager. And then to add all that in, that operations manager then now managed the different businesses, because I've got Smart Home Choice, I've got the Deep Pockets private lending company, I've got the podcast, and I also own a brokerage. So when you've got all that happening, you need somebody very strong who understands numbers, who is a driver. Because for me, because I'm a visionary, I'm up here, I don't understand a lot of the moving pieces. And so you need somebody strong in the operations to say, focus, because I've got like
Yeah,
30 different things that I want to implement, but I can't do them all. And so somebody strong in operations is allowing you to, nope, we're not doing all that. We need to just focus on these things. Okay, cool. Because a visionary wants to throw the dart all the time, all day long at different
100%.
things. All right. So
100%.
you need somebody strong in the back. And just like, somebody who's in the back can't do what's in the front. And so the sooner you can understand that. And so when I hire, I have everybody do a disc analysis. I want to know what their strengths are, because then I can talk to them properly and I know where to put them in my business.
Mm. That's a great tip, actually. That's a great tip for people. And that's the thing, is understanding where your strengths and your weaknesses are, and then hiring complementary so that it can balance itself out. Because if you have two visionaries, but you don't have someone keeping everyone in check while you're all over the place, you know?
Exactly.
I love that. I wish we had gotten to this part a whole lot sooner, because there's so much more we could even unpack from there. Um, I love diving into systems operations, and just getting a higher leverage for your time, because that's ultimately where you really are able to scale and get
Yeah.
leverage. But how long did it take you to get to that point where you guys are able to take 4 months off in the year?
You know what? We started almost right off the bat, but I'll say that it was maybe the third or fourth year where we really got to then start to enjoy it. But we definitely slowed things down. It was more, I would say, like a 4-hour work week. And
Yeah,
during those times, like we still had to do some things, right? But
of
then when we
course.
were able to bring in other parts and staff and um, I guess you'd say business partners or realtors, and yeah, I would say a couple of years is when we really got to enjoy it. And then there are times where we do expansion, and so sometimes I do have to work a bit more in the summer months, but not often. A lot of times, we're done, and we do a little what's called a summer hiatus party at the end of June every year, and we tell everybody on social media, we tell all our clients, we're like, bye. And funny enough, things just slow right down, right?
Yeah.
And it's to let people know that you can design a life. You really can. And I go to my cottage, I've got a boat, I enjoy, we hang out. And by the end of August, I am like, I need to go back to work because I
Yes.
cannot continue to hang out, drink, just, you know what I mean? Like people say, I can't wait to retire. Go and lay on the beach for a year. Try it. I guarantee you can't do it.
Mhm.
So you need
100%.
purpose. Purpose is so important. And people don't see or understand it because when you have purpose, well, then you're just playing. You're having fun. Like I'm enjoying it. But yes, I do get burnt out. But then I know that I got this little mini retirement coming up, so I can go extra hard. I can put in the long hours because I know that there's a little freedom coming up for a couple months where I can enjoy it. And then the end of the freedom, I'm like, I need challenge again. I need purpose
Yes.
again. Right. So,
Makes a
and
ton of
then when you
sense.
do that, I can do this till I'm like 90 years old.
Yeah, makes a ton of sense. There's a season for
Mm.
everything, right? And it prevents the burnout because you're not going too long and pushing yourself to the point where your body forces you to say, hey, you need to take the break. You're
Right.
taking the break. While you're taking the break, you can also step back, have a little bit more mental clarity as well, and that
So
opens up
important.
creativity and helps you sort of realign things and make sure you're staying on track. Um, I think
So
it's a solid
important.
plan. Yeah.
Yeah.
Yeah. So
So
question
important.
for you, sorry, you want to say something?
No, I was going to say it's
Oh,
really important that clarity because you need to stop and say, am I taking on too much or can
yeah,
I take on more? Right.
100%,
Is it
100%.
still serving me or is it not?
Yeah, yeah. And I think just that direction gives you way more of an output than just sheer action,
Right.
undirected action all over the place, right? Your output's way higher if you have it purposefully directed. Um, and that takes some mental clarity, stepping back to ensure that I am still on the right path. This is the direction I need to be pushing in, or this is the right vehicle I need to be using to get there. Um, Question for you is where is most of your focus on in your business? Now, I know this will change given the season, but is it more on the systems, the lead generation, power team relationships? What does that look like for you?
No, for most of my stuff now is more on the education side of it and partnership and bringing in different partners and seeing where we can create synergy, whether it be on the
Mm,
private lending side of it, whether it be on the sponsorship side of it, whether it be them coming out and doing a talk to our investors, maybe joining forces with another company. That's kind of where my strength lies. That's what I spend a lot of time. And then my team is really now working on the leads that are coming in. So those events bring in new leads that goes into the database, and then they're able to work those leads and assist them with the buying an investment property or buying or selling their home or refinance, whatever it may be. Right. So that's kind of where my strength lies.
got it. Okay. No, makes a ton of sense. Now, honestly, I wish we could just keep this going. I know we out of time here, but quickly before you go, like this is a segment that I'd love to I I love to see what my guest responses are, and I'm really curious. I think I can kind of predict what your response is going to be, but let's see. Let's pretend that we've stumbled across a time machine that allows you to travel back and forth in time. Can't
Yep.
change anything, but you can give and receive advice from your younger or older self. So first, if we go back to 18-year-old Gary, what advice would you give him with the knowledge and experience that you have now? Now, this can be business, investing, personal, familial, whatever that is. What advice would you give your 18-year-old self?
There's a lot of advice I'd give, but if I had to pick the one, I would just say believe in yourself.
Mm-hmm.
Just believe in yourself, right? Drown out the outside noise. and only compete with yourself. Just be a better version of who you were the day before. That's it. Very simple.
I like that.
And enjoy the ride.
Yeah.
Enjoy the ride. Don't get caught up in the destination, because the destination is the end. You want the journey, right? I'm chasing the rainbow and having fun in the rainbow, not the pot of gold.
Yeah. And I think that's even more important in this day and age where we have access to peeks at people's quote unquote lives that they're putting out there for people to see. That's not the holistic snapshot of what their lives look like, and comparing yourself to people's highlights. And I think that can be demotivating for a lot of people. And you have very little control of that, but you have a lot of control in comparing yourself to yourself, comparing
Yeah.
yourself to who you were yesterday, making incremental
Especially social
changes.
media. Yeah, especially
Exactly. That's
social media.
exactly it. Yeah. Social media, because you see one aspect of everyone's lives, you see all the glamour, and it's not a fair comparison comparing it to your day to day life. Whereas you compare to yourself yesterday and the day before, it's within your control to change that. It's easier to change that. It's easier to incrementally get better at that and focus in on the journey and not the destination.
I tell people post and ghost, meaning
Ah, yeah.
post and get out of social. Post and go. And here's another tip: if people are thinking about maybe wanting to post on social media and they're scared, here's what you do real quick. Just put the camera up, record yourself, 30 seconds, 45 seconds, a minute, and then don't post it. And then do that every day for 30 days. I guarantee you there'll be a video in there that you can post.
Yeah.
And then all of
It's
a sudden
just,
now you get content. And then you'll realize that some of the ones that you didn't really like, who cares? I'm going to post it anyways.
yeah, yeah, 100%. The anxiety of posting is honestly most of the time just internally. It's just in our heads, and just getting through that, breaking the barrier, and allowing you to sort of take the action that you would take without having the fear of the consequence. Just it gives you evidence that, you know what, it's not as bad as I thought it was, or that I thought it would be. You know what I mean?
And
So
most
I love
people
that. That's
aren't
a
paying.
lovely exercise for people
Yeah.
to put into practice.
And most people aren't paying that much attention to you. Some are, and those are your fans. But the
Yeah,
rest are just like they like it and then they scroll on. How many times have you seen a video of your friend that you like and you didn't watch? Be honest. Many
yeah,
times. You're just supporting them. You don't
yeah,
watch every single video. Of course you don't.
100%,
Right. And
100%.
so just be in competition with yourself, put it out there. Your fans will love it and they will watch every single video, and then eventually they'll reach out to you.
It's so true. It's so true. And yes, for most people out there and the people that know you, everyone's really worried about themselves for the most part. So most people aren't really judging you anyway. But yeah, putting it out there, because the people who need to hear the message will hear the message. And that's why you're doing what you do. I love that. Now, if we were to flip it over, looking ahead to your 80th birthday, what advice do you imagine future Gary would offer you at your current age?
Sorry, so the advice that my younger self or older self would give me
Older
now.
self. So 80-year-old Gary, you managed to stumble across
Oh, okay,
80-year-old
got it,
Gary.
got it.
What
Yeah,
advice would
yeah,
he give you at your current age?
yeah. It goes faster than you realize. So enjoy the ride.
Oh yeah. Yeah.
Yep, yep. Don't forget to smell the roses along the way and have fun. And it's just a game. So play it like a game. Just have fun. It's just a game, right? Nobody gets out of this alive.
Exactly. Exactly. And when you put that into perspective, it it changes a lot for you, right? Because now you can take the risks you've been wanting to take but been holding off. You can be bolder and you can live more intentionally, and be unapologetically yourself, so that you can get more fulfillment out of your day to day. Because that's the truth of it all.
Yep.
We're all here for a limited time, and I think it's our duty to make the most of it. Now, Gary, I want to thank you so much for coming on. This has been an amazing conversation. It's been so insightful. There were so many other things I wish we could have unpacked. We just didn't have the time for it. But I know the audience out there listening got a ton of value from this. And I tell you what, everyone listening, I'll be sure to leave Gary's info in the show notes below. Go and check him out on social media. Follow him so that you can get a lot more of these great practical tips and insights. Gary, thank you again for coming on, man.
Oh, listen, thank you very much for the question, and thanks for having me on your show. It was fun. I really enjoyed it, and hopefully anybody that was watching got some good tips out of it, and something that might help change their life. That's why I continue to do these things. So thank you.
To our listeners out there, if you're looking for more valuable insights, be sure to subscribe. Share this with someone who can benefit. And as always, keep investing smartly. Thank you for tuning in to the Wealth Through Real Estate Show. If you're serious about building a multi-family portfolio, well, then you need to make sure that you are top of the list for any real estate broker in your area. If you want to climb that list and you want to learn how to raise capital like a pro, you absolutely don't want to miss my episode with Chris Davies. This is your host, Alray Noble, signing off.